Vincenzo's Go Crypto Investing this August the 4th, 2025 altcoin updated. And once again, Jabroni Killer members, I'm talking to you. I appreciate your support. And for future Jabroni Killer members, it's as cheap as $3.99 a month. There are more expensive options. If any of this information gives you any value, it helps keep this movement of us becoming asset millionaires together via gold and silver bullion and mining stocks, 401k, steady investing, cryptocurrencies, real estate, cash on the side, earning 3 to 5% in CDs or bonds for emergencies, buying a new or acquiring into an existing asset. And you Jabroni Killer members, you get these altcoin videos about 6 hours, usually sometimes longer, but a minimum of 6 hours early as a thank you to give you that first mover advantage. And if we look at AMP, which is very critical, it's coming down. And with the crypto market, if it stays bearish, unfortunately, we're going to come back down to the 0.00315. And that is our multi-year pattern support where we've attempted to wick out several times. But you can see this goes all the way back. I don't want to zoom out anymore. This goes all the way back to early 2024, right when we were getting back bullish. So that's very critical to see what happens there, and that's what we're watching in the short term, and that's what you need to know for this video, and that's what we're trying to do in our new format. Simple, quick things that are important and what you need to know and what we're talking about clearly to understand in a simple way. And what we're talking about today is the short term, and in the short term, your major underneath support is the 2-year pattern support at 0.00315 there on that horizontal major support level. And that's what you need to do to stay short-term bullish in this pattern. Obviously, if you fall out of it, your next major support level is the 0.00252, but we don't want to do that. So in the short term, this is your major support level. Obviously, you don't need me to tell you in the short term the overhead moving averages are the problem, and the 200 days rejected you twice in the past 3 months. So if you want to start to get bullish, you got to try to either hold here on a retest or try to make a slight, even if it's ever so slightly higher low here, turn back to the upside, and then start reattacking the 50, then reattack the 100. But you can see here you got the wick and got rejected, just like we're going to reject that. So that's what you need to do in the short term with AMP, and that's what we're going to focus on right now. The DGB, it's the same thing, but you might be getting that classic hook nose bearish reversal pattern that we coined because you came all the way up to the 0.08 after you were way above it, failed the hold, it came through it, came back up to it, now getting rejected. If that's a hook nose bearish reversal, you could come all the way back to a swing regional low of 0.00685 and or bring the 0.00567 back into play. But that doesn't mean that has to happen. This could just be a nice consolidation down, but you'll make a higher low than here and then come back for another run at the 0.00839. So in the short term, obviously major upper resistance is here. As long as you're below that, you're short term bearish. As you can see, if you got back above this, you're short term bullish, and then you can try to reattack these moving averages in the daily, which you need to first start with the 50 and then get over the 200, because once you get over the 200, that can lead the way if you can have a successful back test, which you were not able to do here, to coin the way for more move to the upside, right? So that's what we're looking at there. I believe that is the most important things you need to know today in the technical analysis. If we scroll down to, we're going to try to hit as many of these as we can. ALGO, what I believe is the most important technical analysis I can give you today, is what we've been talking about the last several days. Is now you see on this retest, we failed to hold the 24 cents, the bottom part of this red trading zone. And you can see now, by doing that, can we zoom out? I was hoping not to do that. But by doing that, you can see what this red trading zone is. By getting rejected out of there like we did, that makes you bearish short term. And like we were talking about this whole way up, that's why we can't do that. When you take it out and then move into a closer time frame, it makes it look all jaggedy. Is that there? There it is. So that's doing the same thing. Let's get out of there. We'll make a new one. Arrow, come on, what are you doing, Arrow? Apparently the arrow doesn't like it unless you're in the hour time frame or closer. So let's try that again. Sorry, that just brought my momentum to a screeching halt. So like we were talking about, where you need to, I don't know what it's doing now. Now it's being a problem. But so we're just going to stop that. I don't know what that's doing right now. But like we were saying, so now you can see it got rejected below that 0.24 cents, which is the bottom part of this red trading zone, with the top part of the trading zone sitting up there at 35 cents and the bottom part at 24 cents. And like we were telling you, if you get below that, it immediately makes you bearish. And what it likes to do is act like a magnet back down here to that critical 19 cents. That determines if you're short-term bearish, medium-term bearish, or medium-term bullish. But right now, as long as you're below that 24 cents, what you need to know is that your major resistance level now is it's going to want to drive you down. And if you can't get back above it and can't hold these moving averages, you will slip and you will have a big fall. If you can get back above the 24 cents, then you can become more short-term bullish and try to make a run back at this regional high up there at 34 cents, right? XCN, same thing that we were talking about yesterday, and you can see our two paths. One, you get rejected by the top part of this purple trading zone, which you are now. If you do, you got to hold this regional bottom right there, which you're at. If you don't, you're going to come all the way down, which potentially down to the bottom part of this purple trading zone at 0.00810, right? Something that you did just before you had this nice April pump and then got rejected 3 times by the bottom part of the pink trading zone right there at 22 cents, right? So right now in the short term, what you need to know is you're below the 15 cents. So you know you're bearish. You see you're bearish by getting rejected by the 200-day moving average in the daily. Now you know if you don't hold this regional low here, your next support is all the way down here. Unfortunately, it would be a big fall and a fast fall. So that's what you want to hold in the short term, this 0.013. And then if you want to get short term bullish again, you got to get back above this 0.015. Then you can attack a descending, brutal descending overhead moving averages that have been acting as major resistance for quite some time now. XDC, same thing. You're forming a rounding top at this 10-cent major upper resistance. And that's another major thing that you guys need to know is you got major resistance here and here. And if you can't reclaim the bullish action, you're going to fall back down into the moving averages. And in the short term, what you need to know is the 10 cents is your major resistance. If you get above the 10 cents, you can run to 13 cents. But if you get rejected like you are, it's going to force you back down to the 200-day. And then if you can't hold it, it will knock you back down to the 0.059 level, right? Got to move along here. HBAR, same thing. You got rejected by the 34 cents up here. And that's what we've been talking about the last several days coming into it. And we said it would trade you back into the moving averages, which you initially got bounced on the 50, but now you're coming back to it. And if you can't hold the 200-day, you're going to fall back down to the 15 cents. If you can hold the 200-day, you're going to come back to 34. And in the short term, what you need to know is 34 is your major upper resistance. 15 is your major underneath support, and the moving average is the 200-day dictates. If you're above the 200-day and hold it, you're going to have a tendency to want to come here. If you slip the 200-day, obviously you're going to have a tendency to come down here, right, in the short term. And that's what we're looking at in HBAR. LCX is the same thing. We're below all 3 moving averages. And as long as we're below the 50, we're very bearish, and it's got a tendency to want to come down to the 0.0926 is your major short-term support. The 0.14 cents is your major overhead resistance. And then if you fell through your major short-term support, your major long-term support is at the bottom part of that red trading zone. Like the channel, subscribe. I got to get back into work. Peace and love. Jai.